AI offers tremendous benefits for finance and accounting, but it has real boundaries. This final module is about understanding those limits, navigating the rules, and using AI responsibly. By the end, you'll be able to manage regulatory and ethical obligations, recognize and communicate what AI can't do, and build a governance framework for your practice. The mindset is simple. AI is a powerful assistant, but you remain the professional in charge. Everything it produces still passes through your judgment and your responsibility. Let's start by looking closely at the core limitations you need to keep in mind every time you reach for an AI tool in your finance work. There are 5 core limitations to remember. First, knowledge cutoff. Models are trained up to a date, so they don't know recent law changes, new regulations, or current market conditions. Always verify currency. Second, hallucinations. AI can invent plausible but false citations, numbers, or regulations, so verify every factual claim independently. Third, context limits. AI only knows what you tell it. It can't see your systems, files, or clients, so give complete context and check that conclusions fit your situation. Fourth, mathematical unreliability. AI predicts text, not calculations, so never trust its arithmetic. Do the math yourself or in a dedicated tool. Fifth, no professional judgment. It can't assess materiality, weigh risk, or take responsibility. That's your job. Using AI doesn't change your professional obligations. Competence still matters. You need the expertise to evaluate AI output and spot errors, and continuing education stays essential. Due professional care means reviewing AI work the way you'd review a staff member's work, keeping healthy skepticism, verifying significant items, and documenting your review. Integrity means being honest about how work was produced and not passing AI output off as your own independent analysis. Confidentiality means protecting client data, understanding each tool's data policies, and not sharing sensitive information unnecessarily. Professional bodies echo this. AI should augment, not replace, your judgment. You remain responsible for the work product, data security must hold, and staying competent in AI is encouraged. Regulations apply on 2 fronts. First, data privacy. Under frameworks like GDPR and CCPA, be mindful of personal data in your prompts, know where data is processed, consider retention, and make sure proper consent exists. Best practice is to use enterprise tools with privacy commitments, avoid unnecessary personal data, and anonymize when you can. Second, industry-specific rules. Financial services have SEC and FINRA guidance, model risk management, and fair lending considerations. Banking adds OCC guidance and BSA and AML implications. Audit brings PCAOB considerations and documentation requirements. Tax practice carries IRS due diligence and Circular 230 obligations. This landscape is evolving fast, so stay current through professional bodies, industry publications, regulatory updates, peers, and continuing education. Before you put any client data into AI, run through a checklist. Understand the tool's data policies, find out whether your data is used for training, consider data residency, evaluate encryption and security, and check for relevant certifications. To reduce risk, use enterprise versions with privacy commitments, minimize sensitive data in prompts, anonymize when possible, and document your data handling decisions. The difference between consumer and enterprise tools matters here. Consumer tools may train on your data with limited privacy guarantees. Enterprise tools typically don't train on your data, offer configurable retention, and carry contractual commitments and stronger certifications. The recommendation is clear. Use enterprise tools for client work and reserve consumer tools for personal learning or non-sensitive tasks. Transparency is about judgment, not a fixed rule. Consider disclosing AI use when clients ask about your process, when engagement letters address methodology, when AI significantly shaped a deliverable, or when professional standards call for it. Disclosure may not be needed when AI is used like any ordinary tool, such as spell check or research. The work is thoroughly reviewed, and your professional judgment is clearly applied. When you do explain it to clients, the message is steady. AI helps you work more efficiently, all output is reviewed and validated, professional judgment guides every conclusion, confidentiality is maintained, and your responsibility for the work is unchanged. If it fits your practice, you can also add technology use language to engagement letters. Finally, build governance, so responsible use is systematic. A framework rests on 4 elements: policy for approved tools and prohibited uses, training for required competencies, quality control for reviews and documentation, and risk management for assessment and incident response. The lesson gives you a ready prompt to draft that policy, shown here. The responsible AI mindset stays human-centered, quality-focused, transparent, secure, and evolving. Congratulations, you've finished AI for finance and accounting. Remember, AI doesn't replace your expertise, it amplifies it. Now try it yourself. Open this prompt in the interactive playground on the lesson page at freeacademy.ai, or paste it into ChatGPT or Claude and draft a governance policy for your own firm.